Rajeev de Mello, you are head of Asian fixed income at Schroder's Investment Management in Singapore. Which is your favorite Asian country for investments and why?
Yeah, currently in the situation in Asia, I favor India. India because it's one of the highest yielding countries in Asia and even beyond in emerging markets. 10-year government bonds yield about 8%. And if you take corporates, you get an additional 100 to 150 basis points. It's a country which has gone through quite a lot of difficulty in the recent couple of years. And so the currency is also depreciated, unlike a lot of currencies in Asia. So we think that with a combination of the higher yields and a currency which we expect to stabilize, even if it appreciates a little bit, it gives investors both bond potential as well as currency potential.
And which country you would rather avoid in Asia?
Well, generally my outlook on the region and on the world is quite positive. So some of the more defensive countries, which I usually like when times are more difficult, I'm underweighting. And those are the countries like Hong Kong, Singapore, Korea as well.
And how best invest in countries like India, for example?
Well, it is always quite tricky to invest in some of these big Asian countries, whether it be China, India, or Indonesia. Investors need licenses to buy bonds or need to buy quotas to invest in the country. So in Indonesia, for example, in India, what we do is we buy the government bonds or we buy some of the corporate bonds. The infrastructure bonds we think are particularly interesting in the local currency. That way you get the interest rates in India, the high ones, the 8 to 8.5%. You also get the currency exposure.
Mr. Rajeev, thank you for the talk.